All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Today, for the first time, I am streaming on Rumble. Oh, wait a minute. Just as I said that. Okay, I just got an error from Rumble. Great. All right. Yeah, so I'm not streaming on Rumble, but I was trying to until that error showed up. Anyway, I'm going to have to fix that. Not going to fix it now. Anyway, welcome. If you're new to the stream, let me briefly explain how this works. So the first thing I'm going to do is go over the economic calendar, okay, and which is something you should do every Monday to make sure you're aware of all the important events that may be coming out in the week so you don't get caught in anything unusual. Then we're going to go over the Bitcoin chart. We're going to talk about these inflection points, and we're going to talk about the possible scenario for the coming week. Okay. Then after that, I can answer a couple of questions, or we can also go over some trade scanner ideas and talk about what's been going on in this environment. Okay. So with that, let's get started. Hold on. Let me just pull this slide up. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Also, if you're watching me on TradingView, hold on. Let me pull that up over here. If you're watching me on TradingView and you can't see me, make sure you refresh the browser. Okay. That usually solves the problem. And I'm watching the chat there now. All right. So, and a couple of things real quick, just a couple of announcements. First, if you're looking for an exchange or you're looking for a new place to trade Bitcoin or your altcoins or whatever, consider one of the links in the description, Bybit or MEXC. Those are affiliate links. And what happens is when you fund an account, okay, you open an account and you fund an account and you place trades, Stian gets a small fee. Okay, those are his affiliate links. Thing is, it goes a long way for helping him support the community with all the tech work and technology work that he's been doing. He put together for me an app, okay, which allows me to send notes to my server, you know, the community server and Twitter and all these things, all these places very quickly. So, Steve, I saw your email. I haven't installed it yet, but I'm going to do that tonight so I can play with it. But this is a big deal for me because now it allows me to share quick observations with my community, whether it's the free channel, whether it's a premium channel. Like, for example, if I see something developing in Bitcoin, right, but there's no trade signal there yet, I can send you a heads up and say, hey, look, I could paste a TradingView URL, write a quick note, press send, and now I can at least let people know without having to spend all the time having to log into this and do that and this and that. So you get the idea. Anyway, he put that together. It's a lot of work, and by having one of those, by using one of those affiliate links, you help support him so that he can continue to do such great work. Okay. Also, when we have the bot updated to the point where it can take trades for you, people that have these type of accounts will be the first ones who have access to that, because obviously we're going to be setting up Bybit first, most likely, for the bot trade feature. Okay. Anyway, just wanted to mention those things. Also, check out the other links in the description. We do have trade signals and we have other things. We always have a number of things in the pipeline. I'm always working on trying to improve the community further to create a great experience. My goal is to help you create or help you develop the correct mindset to play this game, whether you want to be a day trader, a swing trader, even an investor. I want you to understand the what's really going on here so that you're better prepared to make informed decisions. And I'm not talking about the illusion of being informed. I'm talking about actually using valuable information, which we can find on charts, right? Okay. So anyway, enough of that talk. Let's get into this, shall we? All right. And by the way, too, if you like my stream, please press the like button. Please subscribe to the channel and all that stuff. It helps out. And all the people that subscribe to me on Rumble, thank you for that. But I have to fix that situation now. All right. But anyway, I had to get 5 subscribers at least in order to even attempt to stream on there. So people that subscribe to me, thank you. All right, let's talk about the economic calendar, shall we? First things first. So the economic calendar only showed one thing that was really worth mentioning, and that was tonight at 10 p.m. Eastern time, the Bank of Australia has their rate announcement, right? And that's pretty much it. Earlier today, there was an ISM manufacturing number at 10 a.m., but Obviously, it moved. I guess it's responsible for the red S&P, but those are usually not major numbers, right? So tonight we have the Aussie dollar. Maybe it'll move a bit, depends on their decision, but that's not really a global market moving piece of information. Otherwise, throughout the week, there are some reports here and there, but they're not major. Okay, so I would consider this a quiet week in terms of economic news, unless there are any surprises. Now, also, you need to keep an eye on quarterly reports from stocks. If a big stock comes out with some kind of surprise, it could move the market, right? So just things to keep an eye on. But otherwise, it looks like a pretty quiet week in terms of economic events. Now, the main reports that I'm always looking for are non-farm payrolls, which we had on Friday, right? FOMC meetings, which we had on previous Wednesday, and also things like the CPI report or any other type of testimony from Chairman Powell, anything like that. That's what I'm really watching the calendar for. Other than that, there's really nothing else worth talking about, okay? And by the way, the NFP report, which came out on Friday, had a very interesting effect. The report came out stronger than expected, which basically it basically let everyone know that there'll be no rate cuts, right? The market perception of rate cuts in the future became very low because he's not going to cut rates if we have a robust jobs situation, right? If a lot of jobs are being created, it means the economy is healthier than whatever. That's typically what it means. It means so it's less of a reason for him, Chairman Powell, to cut rates. Okay, and everyone wants him to cut rates. I don't know why, but that's what they want. So anyway, just wanted to point that out. Meanwhile, so the initial move, what I want to point out about that, I'm just going to mention it before we get to the charts. The initial move on that was bearish, right? The S&P sold off, and then the entire day after that report, the market rallied. So that's why it's so important not to get caught up with like news and opinions, because if you started out the day shorting, you would have gotten hammered if you kept shorting into that slow grind higher the whole day. Okay, very important not to have opinions, even when a news report comes out. All right, next, I hope you read my TradingView article. I wrote my article, published it yesterday. I don't know, I haven't seen too much feedback from it, so I'm guessing a lot of people haven't read it. I don't know. But anyway, it's been pretty slow in that area. Maybe people are just not interested in Bitcoin right now. Let me make my chart bigger, okay? So here we go, right? So let's talk about that, and let's talk about some of the changes I made on my chart. Now, and let me say hello to a few people here, right? We got Stian, good to see you as usual, and thank you for that great app, which I'll be testing tonight. Eduardo's, Dijon, good to see you. Alex, all right, from Romania. Pnug from Minnesota, cool, good to see you. Maybe that's pronounced just Nug and you don't pronounce the P. Okay, anyway, thanks for stopping by. Also, if you want to share what city or what country you're from, that's always a fun fact. I am streaming from the greater New York City area, also known as Northern New Jersey. Hey, Isaac, how are you? Good to see you guys. All right, so let's talk about this Bitcoin situation, and let's talk about inflection points, right? So what I have here is my daily chart, right? Now, if you see what's going on here, this thing has been very slow, okay? We had what I think it was over here is where the FOMC meeting came out, right? This initial selling movement right here. That was the outcome of the FOMC on Wednesday. And then we had non-farm payrolls, right? Which I guess is this little section over here. And since then, it's just been consolidating in this very tight range, okay? Very tough area. Now, a couple of things to point out. This is a minor resistance. It's not major, it's minor, okay? It's basically the middle of the range. And this is very important, especially if you're looking at day trades, okay? Because you have to pay very close attention to this level right here, which is 43,338, or basically you can round that to 43,350, 43,300, that area. Now, that's an inflection point because obviously the market is reacting to that point. You can see it's sold off a couple of times from there. Now, that doesn't mean you get all crazy and you get all bearish. For day trades, that's relevant. But on the swing trade time frame, right, it may not be the same story. This is why it's important to look at the larger time frame. Whether you're a day trader or a swing trader, you should always start with the larger time frame first. In this case, the daily chart, right? That's why I always look at this first. But usually for these streams, I'm talking about swing trades. Now, we have this resistance situation developing, right? We have basically a double top and it's testing this low. Now I highlighted this support over here. That's basically what 41.6, right? 41.5 around there. And that support is the minor support that's in play. Again, an inflection point for day trades. So how do you use this information? If price is fooling around 41.5, 41.6, and it looks really bad, instead of reacting and saying, oh, I'm going to short this, you say, wait a minute, I'm at a pretty important support. It may reverse here. I should probably wait for a reversal. Okay. Or if I do take a short, I should be extremely cautious, because if I do see the reversal, I'm going to have to get out very quickly, because this thing can squeeze the wrong way and I don't want to be stuck in that, right? That's the mentality you have to have at that level, instead of, oh, it's breaking, let me get short, right? So be careful with that. Now, again, that's a minor support. Now, if it clears this level, if we clear this support and we're pushing like 40,850, 40,005, something like that, then we're working our way into here. Okay. And that is an important swing trade level. Again, another inflection point. That's what I'm really highlighting in the stream. And this level is where I'm looking for the reversal on the daily time frame for a swing trade long. I've had this plan now for like 2 weeks, and the market just doesn't cooperate. Now, I'm not going to sit here and start looking for swing trades up here. Okay, this is a day trade area. Up in these areas, whenever you're at less than ideal support or resistance levels on the larger time frame, like this area, this is less than ideal. I wouldn't take a long here as a swing trade. I have my plan here. So my point is, whenever you're at less than ideal levels, what you want to do is think of smaller time frames. That's when you should be thinking in day trade mode. Now, some of you may be less experienced. You're like, well, I have no idea even where to begin on the day trade time frame. Okay, if that's you, don't worry. Don't push it, right? Maybe you could take some time to learn. Maybe you don't have time for that. Maybe you don't have time to sit in front of your computer, whatever. No problem. You simply wait for the swing trade time frame. You don't sit there and be like, okay, I'm going to just change my mind and I'm just going to buy it here because it's not going lower. That's a very risky thing to do. You have to look at it in terms of risk, where if you're buying it here, after a reversal appears, the probability is better and the risk is lower. That is much more attractive. Okay. So over time, if you're taking these, you're waiting for these, which is very hard. I mean, sometimes you have to wait a week and a half. That can be very hard on your patience, right? Especially if this thing reverses like tomorrow and does something like that. And then you're missing out, right? Then you feel like you're missing out. That can be very hard to deal with. And that's where the day trade time frame shines, because there's always opportunity on the day trade time frame. It's just the magnitude is a lot smaller. Okay. It's also a very hard time frame to work with. You do have to have more experience, but you can get there over time. As you're learning, you really should focus on the larger time frames. It'll keep you out of trouble more times than not. So my point here again is, I want to see this level trade. If we don't see that level trade, I'm not going to force anything. I'm not going to take trades here. Okay. Now, the trade scanner might call longs in this area. Now, the trade scanner looks at a smaller time frame. And I mention this because I'm with this tool that Stian built for me. I'm going to be able to also share my own trade ideas again in a very easy way. He's working on that module right now. Because right now I have the ability to just send messages, not trade ideas yet. The trade ideas are going to have like, a buy price, a limit order, a stop. It's going to have all that information, right? So I'll be able to send those out, and they're going to be based on what I'm describing to you right now. Okay. Like for example, if I see the trade develop here, that's something I can send out to people who have access to that channel. That's my personal trade channel, which is not the same as the bot. Okay. The bot looks at smaller time frames, and it's looking for another type of setup, which is a momentum reversal type setup. It's not looking for a candlestick. It's looking for something else. Okay. So I just want to make that clear. So that's really the plan here for Bitcoin. And it may take a few more days, right, for this thing to test this level. A lot of times we need a catalyst, right? Just like non-farm payrolls was a catalyst to get this started. We need a catalyst. And when there's no catalyst, a lot of times it'll just linger and do nothing. So when it does that, just check occasionally. Now, this line that I have drawn on my chart, right, this blue line, That's the ideal scenario. That's what I'm looking for. It doesn't mean that the market's going to give that. In my report that I wrote yesterday, one of the things that I mentioned is the goal of this game should not be to forecast the future, right? That's what everyone tries to do. I want to know the future. There's no way to do that in an effective and accurate way. What we're trying to do is gather enough information to measure risk and try to get a sense of probability of what is more likely to happen, right? And then try to measure that potential. Okay, so if it's more likely to reverse long here, how far can that thing go, right? And I'm looking at the 45K area max. I'm not really expecting more than that. Again, I'm thinking like a swing trader in this scenario. I'm not thinking like an investor. Make sure that you understand that as well, okay? That's not the same at all. Now, another thing I want to point out about my chart here, another important aspect is if you notice, I took my wave counts off. I had counting all the way up to 5 going up to here, right? Because this was the 5th wave, as I suspected. So now I'm in the corrective wave, right? So I took that off to just to minimize the confusion. Less is more. So I'm labeling this the A wave, all right? The A wave is this. Now these are minor waves. This has nothing to do with the C wave that I'm going to show you next. But this is the minor corrective A wave, and this section right here may be the B wave. If that's a B wave, then it can have this one leg higher, okay? Now, this is where it gets confusing, right? You may get a little shallow pullback here, and then you may get the next leg up to this area, okay? If I see that, I'm not going to do anything with that as a swing trader, all right? But this is a resistance that you should be thinking about selling. Now, the reason why I want to mention this is if this is, in fact, a B wave, I put a question mark next to it. If that is a B wave, and there's a bearish reversal that develops here, like a large pin bar, okay? If you get something like this, like a really obvious pin bar shows up over here in this area, that would be a sign that this thing is likely going to go into that next corrective wave, which can take it below A, right? If we get that, then this entire structure will be the first corrective structure completed, A, B, and then C. This would be a minor C wave. This little square I drew here, this would be a minor C wave. Now let me show you what the major one looks like. All right. So this is the monthly. And as you can see here on the monthly, the previous month's candle, this is the low of it right here, right? The bottom of that A wave. And it's a pin bar. It's got a long tail on top. See that? So we take out that A wave, we take out the bottom of that A, we'll have our first minor corrective wave, right? Which would basically take up that area right there. But that could be the beginning of the broader C wave. The broader C wave encompasses this area right here. That's the risk, okay? This is the risk that investors face. Whether you want to accept it or not, that is what you face. Now, the market may not deliver that scenario, okay? We may not get a dramatic C wave. We may never see this level. We may never see 15K or whatever that level is. Is that 15K? Yeah, like 15K. We may not see that. It may only pull back halfway, right? It can pull back anywhere. It can pull back a quarter of the way. It can do whatever it wants. But the point is, like I said, we're not trying to figure out the future. What we're trying to do is we're trying to measure the risk and answer the question, should I be buying here? Should I be selling here? What should I be doing here and why? That's the question we're trying to answer. And in my opinion, based on this location, based on this potential risk, investing at these levels is still unattractive. We're nowhere near any major support levels, okay? And we're in these high risk levels where there's nothing but resistance up here. I mean, look where we are, okay? And if we get that, and we have a potential selling pattern here of the previous month's candle, it's a January candle, and if that thing gets taken out, it could signal selling on a broader magnitude. So if you're long Bitcoin, or if you're long a bunch of things, maybe you're long a bunch of alts, and you have an opportunity to take some money off the table, now would probably be a good time to reduce your risk. Okay. Now, what if what I'm describing here never plays out and we never see that C wave? Well, we should still at least see some kind of support, right? Like 40K. Maybe we go a little lower. And that may be another opportunity to add back to some of your position. Like, let's say you sell some now, lock in some profit, whatever, and you're like, all right, what do I do now? It pulls back to an attractive level. It holds. It gives us a buy signal. Maybe you add it back. Okay, like it's not like because you take some profit off the table that you're going to miss out on some gigantic move. Never think that, because, for example, let's just say Bitcoin pulls back to this area here and never breaks. Okay, let's say it never breaks the bottom of the A wave, and you don't get involved because it looks ugly. You're like, this is too scary for me. I'm going to stay away. Okay, and then the next candles, they start working their way up off of there, right? And you're like, oh, I'm not sure, and then you get a breakout, and then maybe at that point you buy the breakout. Okay, maybe you buy this breakout, which is risky in some aspects, but if you're investing, you're just going to take a smaller position on something like that, okay? Because it may pull back again, but at least you're on generally the right side at that point. Does that make sense? So my point is, you're not going to miss out, but the best prices usually are the lower prices. When you're trying to buy into something, you want to buy into the lower prices if they hold. If they break, you want to stand aside and see where it settles, okay? So the key inflection point for that bearish scenario is here, which is the 38.5 support, okay? If that is broken, sometime soon, then I would steer clear. That would also establish a very large head and shoulders. I don't get all caught up with like the head and shoulders stuff. I don't get caught up with that. It is a pattern, but the thing is, it will become very clear at that point if you have, a bearish situation taking it all the way back there over the next week or so. Does that make sense? So I covered a few magnitudes here, right? We talked about some day trade ideas. We talked about the swing trade idea that I'm interested in. And then I showed you the investing perspective, what kind of risk you're facing with Bitcoin. Now, the reason why I always focus on Bitcoin is because this is the leader. And if this thing fails, you better believe your altcoins are going to fail too. So make sure you understand that your altcoins, right, are basically just a smaller version of this. This is like the S&P. Think of this as like the S&P, and your altcoin is like a stock, right? S&P sells off hard. Chances are your stock is going to sell off too, okay? Because S&P is the leader for the most part. So let's just pull up another one, for example. Let's see. Anyone mention any altcoins in here? Let's see. I don't see any altcoins. Man, no one's watching me on TradingView. Is anyone watching me on TradingView? Do I have to stop streaming on TradingView? If anyone's watching me on I see three boosts. Okay, someone likes me over there. Someone pressed something. Okay. What does this say? Okay. So let's just I'll take a look at ZN1, Alex. Sure. That's a very important thing to check out, especially after all the economic stuff we've just had, like FOMC and non-farm payrolls. So let's take a quick look. DOT. Okay. Okay, I'll take a look at DOT. It doesn't, honestly, it doesn't matter. They're all going to look similar. So now here's Polkadot, right? Now, look at this situation. Does it not look similar to Bitcoin? It's actually the head and shoulders is a little more pronounced, as you can see, right? Again, I don't make a big deal, so don't go nuts. I don't make a big deal out of this, but it's there, okay? And not only that, you have these lower highs. So this thing is having a hard time, right? And if Bitcoin breaks its supports, most likely you're going to see this support break first, obviously, and then it's going to go for this one. This one right here coincides with the 38.5 on Bitcoin. What is that? $5.99, basically $6, right? It breaks that most likely. If you see price here, most likely Bitcoin is breaking 38.5. And if this is relatively weak and Bitcoin doesn't break 38.5 and just goes to like 39, whatever, this thing may still break anyway. All right. So keep in mind, these things follow. And everything that I talk about Bitcoin, everything that I say about Bitcoin applies to this, applies to most of these altcoins. Most of them look the same, right? Because they all follow. None of these are leaders, none of them. All right. Okay, let me give you another example. Let's take a look at like something like Litecoin real quick, right? Litecoin. It's a little messier, but it's the same idea. Is it not? Let's go to a weekly chart. I got some stuff on this chart, but let's look at a weekly chart. Look at this. What do we see here? lower high. That's a lower high. Okay. You can argue that there's a higher low and this and that and whatever, but the low, this is a very pronounced lower high, and it's coming off of an old support, which is now clearly a resistance, and you're fooling around these supports, right? And you have another little mini lower high right here. Now, again, it's following Bitcoin. If Bitcoin can't rally, do you think this thing's going to rally? So just keep that in mind. Use Bitcoin as your guide for these altcoins. You don't have to get all wrapped up with the altcoin chart. Just use, the Bitcoin chart is a pretty good proxy, and you can just use that to kind of guide what you're doing with these things. Okay, whether you're a day trader, a swing trader, or an investor. All right. So next, hey Tino, you know what, Tino from Mexico. Hold on, I'm going to speak to you in Spanish. Buenvenido, mucho gusto. Puedo hablar algún español. ¿Te gusta? All right. See, I can speak some Spanish without a translator. Okay. So, how about this? Tu compra cuando ves toro, compras. Cuando ves oso, vendres. Okay. I just said if you see a bull, you buy. If you see a bear, you sell. All right. That's it. That's all I can say in Spanish. I could say some bad words too, but I'm not going to say those. All right. So anyway, Tino from Mexico. The only guy I pay attention. I appreciate that. Okay. See? All right. And I even speak to you in Spanish. Okay, cool. So now here real quick. So Link USD. All right. Just to make the point, I'll show you Link. All right. Is that the actual symbol? I haven't done chain link in a while. What is the symbol on there? Yeah, it is. Okay. So, okay, now this is interesting. So this thing is kind of doing the opposite of everything else, right? It broke this resistance. Interesting. You're going to have these on occasion. You have these outliers that don't follow along, right? And maybe there's some news behind this or whatever. Now, so when you have this situation and Bitcoin is not really affecting this, it's doing its own thing, you have to pay attention to the price and the structures, because that's what's going to give you the best information. So what do you have here? You have a consolidation breakout. That's pretty easy to see. And you don't chase this, okay? Let's go to a weekly chart. Let's take a quick look at a weekly chart. Now, man, look at this. You had a consolidation breakout a while back, and then you have this new one that broke out. So you don't chase this, as tempting as it may be, because you have a lot of resistance. Go look at this. Look at this area right here. Look at all this resistance, right, from previous price action, previous supports. So this is a high risk area for longs. It's a great area to take profits if you happen to have some, right? Great area to take some money off the table, right? Now, if you don't have some and you're like, man, how do I get long something like this? How do I buy this? Well, you have to wait for a support. That's usually the best thing to do, right? And your first support is pretty easy to see here. You just go to the old range high, which is, what's this price here? 16 something. Hold on. That price is 16 and a half, 1654, right? So you wait for a pullback to there at least before doing anything else. And if you can get the bullish reversal somewhere there, or maybe even if it breaks back inside to the range, like it'll break back inside sometimes and then find support and then break back out. That's the kind of situation where you want to look for a long, at least for a swing trade, okay? The mistake you want to avoid is you don't want to get caught in this thing now and buy this thing now and then watch it pull back. And what if it breaks and breaks that support? Now you're stuck in that thing, right? And you took all that risk. No reason to do that. So don't worry, you're not missing out. Wait for a pullback. There's always a pullback, okay? The magnitude, we don't know, but there's always a pullback. Just wait for it. And don't short this thing either. That's another mistake people make. They say, well, if it's going to pull back, I'll short it and I'll make money. The thing is, when these things get irrational and they get wild, this thing could do something stupid, right? And there's no way to know in advance. So it's about risk, right? It's not about chasing money. It's not about trying to, outsmart the market. It's about accepting risk and evaluating risk. And I'm telling you where the risk is, okay? So if you just wait for the higher probability situations, the hardest part is doing nothing but waiting. At least you align yourself up for a higher a better chance of a profitable outcome. That's the best we can do, right? So we want to be able to weigh those situations by historical information on the chart. That is what really the value of technical analysis is. And it's very limited, okay? We can only see so far out. The market only has a limited memory. And if we find a level from 10 years ago, yeah, it might have an effect, but it might not, right? But if you look at near-term levels, these levels have a memory because people are stuck in those positions, right? That's why they have a memory. That's why you see reactions off of them, okay? Does that make sense? Okay, you guys. So I'm 30 minutes in. You guys have any questions? All right, so I just took a quick look at Link. So there was a question earlier for the ZN by Alex. Okay, so the bond market. Let's take a look at this. This is very important. I mean, people want to forecast the future. This is the future right here. So let's take a look at a weekly chart. So the 10-year note basically is a reflection of interest rates. And interest rates affect everything, okay, in case you don't know. And in this country, I guess around the world as well, there's inflationary problems. But particularly in this country, we've been struggling with inflation. And the Federal Reserve is in a tough spot. And if they cut, they're going to make it worse. If they stay where they are, people are not happy. We have an election coming up this year. There's going to be political pressure on the chairman to do something because certain parties want to look good and all this and all that, right? But with all that aside, you have to pay attention to the bond market because it tells us what the bond market is pricing in. And usually markets price things in months into the future. This is the perception, right? And the bond market is where the game starts. So we have a lower high established right here in this area, okay? And as you can see, the bonds are pulling back, which means rates are rising because rates are inverse to the bond prices. So the market is pricing in rising rates, maybe because Chairman Powell paused, and then you had that NFP report, which came out too strong, right? Which basically supports a rising rate environment, not a dovish environment, and perhaps that's what the bond market is pricing in. Plus, we had that report earlier today, that manufacturing report. Maybe that has an effect here too. I don't know. But the point is, technically speaking, right, on this weekly chart, we have a lower high, a lower low is still in play. If we get that lower low, that means rates are going back to their highs. Right here, this bottom, that's the high of interest rates, right? That's the high. We go back to those highs. You understand, banks don't like this, right? We just had, Alex was talking about that other bank, NYC Bank, we're having problems. And the bonds have improved. So I don't know what they've been doing. Yeah, they've been having problems, right? The Bank of New York or whatever. Now, if this thing goes back and tests these lows, it's going to put pressure on banks because they have these bond positions and then they get stuck in them and they can't get out of them, right? And if they do, then they have to take these, they don't want to take the loss. And what happens is they get a margin call, right? And then they become insolvent. And when you try to get your money out of the bank, they don't have the money. So you got to be careful of that. And we can see bank failures when bonds start pushing lows and rates are pushing highs. We haven't seen that in quite some time. We've had this ridiculous bond rally. In fact, this rally started back in October, right? When the Fed started to signal that they're going to be more dovish than hawkish, right? That's when they said, okay, we're going to, I don't know what they said. They said something dovish and they created the Santa rally. And this was part of it, okay? Now we're pulling back. Now, just because we have this general bearish trend doesn't guarantee we're going to get the lower low. We may very well get a higher low somewhere along the way. If we get the higher low and we see prices eventually work their way higher like that, we have a clear-cut higher low, that could be a change in the trend. And I would not be surprised to see something like that as we get closer to the election. Maybe by summertime, we'll see something like that because, again, the powers that be seem to want to have lower rates, right? Because lower rates are good for everyone. Lower rates means, people can buy homes again, and lower rates means, cheap money. You can borrow money. High rates means no one can borrow money. home buying stops. It cools off a lot of parts of the economy. So important to keep that in mind. Okay, so that's what I have to say about the bond market. So at this point, nothing has really changed that much. Yes, this looks dramatic when we look at the daily time frame. That looks dramatic, but nothing has really changed. If we hold this low, right, like maybe tomorrow's candle or Wednesday's candle, maybe we get something like this and it goes back up, right? That can easily happen. So we can't make these long-term judgments. We have to let the market tell us. So I'm describing potential scenarios, but the market has to show us those scenarios before we can come to any conclusion about what it means for the economy. Does that make sense? Man, I got no one on TradingView. Is anyone there besides Steen? Let me refresh that over here. Anyone over on TradingView? Okay, I got 5 boosts over there. So there's some people watching, but they're not saying anything. TradingView people, if you have a question or something, say something over there. So I know Steen isn't the only one in there. Okay, UTXO. Okay, I don't worry about banks going bankrupt. There's always okay. Yes, right. Well, it's you know what it is. It doesn't matter really, like on a day-to-day thing. But if banks start going bankrupt and a big one goes bankrupt, then it causes a lot of chaos in the market, right? And then it creates a lot of uncertainty and all kinds of other things, especially if people there's a run on the bank and they can't get their money out. For small accounts, it doesn't matter. But what if you had like a couple of $1 million in the bank and they're like, sorry, we don't have it. They only insure you up to 250K, right? They don't insure you on top of that. So if you have money in the bank, like a serious amount of money, you're gonna have a hard time getting that money out. Okay. Your view about XRP. Why is it too silent? XRP. All right, I'll take a look at that real quick. Why is it too silent? Well, let's see. There's a lot of hype on these things. I see some videos about XRP. I mean, man, there's nothing going on here. Let's take a look at the weekly. Right? I mean, clearly, why is it silent? I have no idea. What matters is that it's silent, okay, not why. So you want to pay attention. Again, when you're looking at these things, you want to pay attention to levels, you want to pay attention to structure, and you want to compare that to where Bitcoin is. This is the weekly chart on XRP, okay? And this chart does not look very good, to be honest with you. You have these resistance areas. Look at this resistance area right here. You've reacted off of this area basically 2 times, right? You're now coming back to supports. This entire structure on XRP, this entire structure, considering that this is a lower high, is bearish. And if it breaks, it doesn't look good. Okay, there's nothing good looking about this chart at all. Chainlink is a good looking chart. This chart looks like garbage. Okay, so just keep that in mind. I know, sometimes you get caught in these things and you just have to hope for the best. If you're an investor, you have to hope for the best. But technically, it doesn't look good. Right? If this thing breaks the support at, what is that, 52 cents, you're looking at lower prices, right? You're looking at a test of these lows here, which is what, 31 cents. And if Bitcoin breaks, most likely this is going to break. And this is acting relatively weak because even Bitcoin looks better than this thing. All right. So just to keep that in mind. Hey, Aries, how are you? Maximum hype is on Manta USDT. Okay. All right, you guys, let me check the time. All right. So yeah, I can't do all these questions. I do this every Monday. I can't. Oh, I got some TradingView people here. Hold on a second. We got it over here. All right, cool. I am no video, just listening. Oh, okay. All right. It's been a while. Glad to see you're still okay. Cool. Split the millions over multiple banks. Well, yeah, actually, technically, you can do that. If all I know is the deposit insurance is only good for $250,000. After that, you're on your own, pretty much, right? Unless you have the money in a brokerage account, then there's something called SIPC insurance, but that only insures a certain amount of stock that you have, right? But if it's actual money in the bank, then it's the federal deposit insurance, and that's $250,000. So, again, if you have small money, it doesn't matter. But if you have big money, it can be painful. And as you know, there's a lot of rich people in this country. So anyway, okay. So you guys, All right. So again, I just want to mention, if you like my stream, press the like button, press the boost button over here on TradingView, subscribe to my channel. I am trying to get this thing running on Rumble, but it failed for some reason. So hopefully next week I'll be streaming on there. I have to fix that. Also, subscribe to my YouTube channel. Again, press the like button. It helps out. Check the links in the description. We have a trade scanner, right? There's a 1 week free trial on the trade scanner, right? So you get 1 week for free. And if you don't like it, you can always cancel. It's very easy to cancel. You just log into your dashboard and you cancel it. All right. But you get all the signals. You can pick whatever asset class you want. If you want the coins, you want the stocks, if you want all of them, there's the active investor package. Okay. And that's one where I share my personal signals. Well, I'll be able to, again, in a very efficient way, thanks to Stian. Thank him for that. All right, you guys. So anyway, just wanted to mention those things. If you have any questions, you know where to find me. You can come into the community, send me a private message. Remember, I don't private message you first. You make sure you private message me. If I ever private message you first, it's probably a scammer. Just wanted to mention that. You can also send me an email as well. Okay, and I'll be happy to help you out. So again, check out those things, and we'll go from there. Again, I'm on every Monday. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.